Hi guys, a very warm welcome and good morning, and you're joining us live on this broadcast here on Moneycontrol. I'm Stacy Pereira and you're watching us live here on this Wednesday morning. Perhaps some kind of midweek blues we would say, but for now at least what we're looking at, the Nifty 50 has been not been able to conquer that 23,000 levels or so. So we are stuck at those levels, rather close at 22,900, and it's also we are seeing deeper cuts in the broader markets. In fact, at least if we had to go by what we saw yesterday, you also saw the advanced decline ratio more in skewed or favor of the declines this time around. Now we'll go through all of those details and what are those next support and resistance levels that we need to be tracking out for the Nifty as well as other indices. But before that, let me take you through all the top headlines. Stocks closed mixed on Wall Street, even as the Nasdaq surged to record high levels. By the next move, obviously this having to come by Nvidia. Asian markets too are trading lower at this point. The Gift Nifty is also suggesting a muted start for the Indian equities. Crude prices have been rising ahead of that OPEC meeting on Sunday. Brent crude gains over 1% to trade above $84 a barrel, while gold prices have been edging higher as the dollar index cools down. Now, Hindalco's US subsidiary Novalis has filed for an IPO on Wall Street. It hopes to raise nearly $1 billion via this IPO, valuing the company at $12.6 billion. And operational performance and debt reduction will be key to track as Tata Steel reports its fourth quarter numbers today. From the broader markets, watch out for numbers from Mazgaon Docks, Bata, Cummins, as well as Alchem Laboratories. And as intense heat wave sweeps North India, Delhi sees its record highest temperatures at 49.9 degrees Celsius, 9 degrees above the normal temperatures at the time of this year, last time around. Now, the IMD has also issued a red alert warning for Rajasthan, Punjab, Haryana, as well as Gujarat. Well, those really sweltering summers, we could say, is something that everyone is going to get, make it a part and parcel of their lives perhaps. And of course, we have other bigger cues to be tracking as well. More importantly, the main big event outcome, of course, the June 4th elections. And that's pretty much what is really guiding the markets, or rather playing that fence sitter, if it has to be for the traders, or also, not giving much direction when it comes to the Nifty and whether that can actually go past that 23,000 levels. Yesterday, remember, we saw that last hour again of profit booking, Nifty closing below that 22,900 levels or so. But let's also track a couple of F&O cues that you could be watching out for. Now, if you look at the monthly options data, 24,000 strike has continued to hold that maximum call open interest, even though we've not been surpassed that 23,000 levels at this point. But that can definitely go on to act as that key resistance level, post June 4th perhaps, or at least in the short term basis. Whereas the put side, we did see maximum open interest coming in for the 22,500 strike, which will perhaps be that support level for the Nifty. If you look at the Nifty put call ratio, of course, that one now has dropped further to about 0.94 versus the 1.02 levels that it was in the previous session. And let me remind you that, if the ratio falls below 0.7, right now we are at 0.9, but it falls below 0.7 or 0.5, then it will start indicating that there is more selling happening in the call side, which is higher than the selling in the put side, which then reflects rather bearish sentiment or bearish mood in the market. And of course, another indicator of that perhaps is the India VIX index, because volatility too has hit a fresh 2-year record high on Tuesday, especially ahead of those exit polls that everyone is keeping their eye out for. Now, it is likely to remain at these elevated levels at least till that mega event is out of the way. we did see that India VIX index jumped to about close to 4.32%. So nearly 5% jump in just a single day, standing now at 24.20 levels. This is the highest closing it has seen since May 25th, 2022. Now, in terms of the stocks that are in your F&O ban, now NSE has gone on to add Aditya Birla Fashion and Retail once again in this ban. Remember, yesterday they did put out their Q4 numbers, and now it's once again in the F&O ban. You also have Biocon, Hindustan Copper, Vodafone Idea, as well as Piramal Enterprises, all of these ban list, whereas NSE has removed GNFC from the F&O ban list for May 29th. Now let's talk about the fund flows and where the monies are really coming in. Now we did see both FIIs and DIIs both being buyers yesterday, at least in the cash market, but it was also impacted a lot by the multiple block deals. We saw 4 mega block deals take place yesterday, and we are also hearing that today also there are a couple of them anticipated. But in terms of the FIIs, they were net buyers, but rather slim buying, we would say, that is happening at this point. Just about 65.57 crore worth of equities that were bought by FIIs, whereas DIIs, as usual, have been doing that heavy lifting. They pumped in around 3,231.67 crore rupees worth of equities in yesterday's session, according to the provisional data. And like I was mentioning, the earnings that you need to be looking forward to today, Tata Steel, that's going to be a big one that we need to see. And if you have to look at just how it has performed in the last whole week, we've seen Tata Steel almost every other day in that top gainers list. So we'll have to see whether the earnings actually have a bit of surprise. It has seen quite some bit of swings. It did take a hit in the in Q3 because of that one-time loss that it had to see because of its European business. So all of that is something that will be in focus. There's Aadhar Housing Finance, as well as Bata, Cummins India, Deepak Fertilizers, among the others that will be putting out their numbers. In fact, 550 companies will be announcing their numbers, their Q4 results today. Well, let's also get discussing not just these stocks, but also the strategy that you'll need to adopt to be, in this volatile market. What is really going to be? Are we just going to play that wait and watch? Is it that buy on dips? Is it a sell on rise? Which would be the right strategy to be adopting at this point? Because we're seeing that kind of trajectory, at least when it comes to the benchmarks and how they've been performing. So let's get going. Let me bring on board Ajit Mishra. He's the Senior Vice President of Technical Research at Religare Broking. Good morning, Ajit. Always a pleasure to have you with us here at Moneycontrol. I was just talking about, let's talk just about the Nifty per se. We've been seeing some exhaustion by the bulls, we would say, at this point, because that steam is at least pulling through by the end of every session. We managed to reach new highs, but then we are just that momentum is not really keeping up, we would say. Are we likely to see this price-wise correction maybe post the rally, we'll say, or post the results? Is that what you're looking at? And what are the charts really suggesting at this point? Is there more consolidation expected to continue in the coming days? And what if we fail to cross this 22,900 levels? Then are we likely to see 22,700, that mark? Are you keeping those as your indicators at this point? What are you reading for the Nifty?
Good morning, Stacy. So yes, again, after making new record highs, there were hopes that this momentum continues, but we are seeing pressure again around the upper band of this rising channel which Nifty is currently trading in. The 23,100 was a zone basically where we had this resistance of the upper range of this rising channel, and Nifty respected the same, and now we are seeing a bit of a profit taking. But I feel that the trend is not going to reverse, just like that, considering that the VIX has been inching higher for almost 2 weeks now, and still we could manage to post strong gains in the last 2 weeks. This is a normal retracement so far, and I feel that the previous resistance zone, close to around 22,700, 750, the previous high, should act as an immediate support, and then eventually the 20 EMA, which is placed around 22,500, 550 zone. So still it's a buy on dip market, but yes, since we have an impending event, and the volatility is already at high levels, we could see, sharp movement in the index, at least in the next 3-4 trading sessions.
Right.
So if somebody is planning to trade index, the prudent approach is to look for buying opportunity through option strategies instead of going naked long. So around, let's say around 22,760, 640 zone, one can look for initiating a bull spread instead of looking for a naked buy in the index.
Right. So that should perhaps be a strategy for the index. Look at options rather instead of going plain. But Ajit, also your view on the bank Nifty, because that has for the month of May, if you see, it has been quite a laggard, but managed to see some bit of outperformance coming in the last few sessions. We saw in the likes of an HDFC Bank actually starting to participate in the rally or so. But the index is now placed below those important resistance levels of 49,500. So should one just be waiting for a pullback to enter something like a bank Nifty now? Is that 48,000 levels something that we should look at, or wait for it to break above the 50,000 levels? Because right now we are poised just at that 49,100 odd levels.
Yeah, that's right. So, in fact, banking has played a crucial role of late in capping the damage, because now we have started seeing profit taking in the other sectors which were doing exceptionally well earlier. So, I feel that it's still comparatively stronger than Nifty, and means on the momentum side at least we can see if there'll be any dip towards, let's say, 48, 700, 500 zone, there'll be a buying opportunity, provided that the market also supports. Because today being the banking expiry, obviously the volatility is going to remain on the higher side. So again, I would say that if somebody is planning any trade, it should be on the buy side, but around the support area, around 48,500 to 700. But through option strategy, by buying 48,500 call or shorting 49,000, that should be the strategy that one can look at in the banking space.
Right. So that can be the strategy in the banking space. Also, a whole host of block deal or block bulk trade that we are seeing happen. Yesterday, there were all of 4 that took place, somewhere close to 4,000 crore rupees worth of equities that exchanged hand. Today, again, we are getting to hear that perhaps PNB Housing Finance is likely to see a block deal. We are given to understand this could be anywhere close to 500 crore rupees worth and somewhere close to 69.6 lakh equity shares that are likely to exchange hands. The floor price for this deal too is set at 717 per share that we are hearing about. But Ajit, when it comes to block deals and how we've seen this transpire, quite a few of those companies with their promoters pairing their stake right now. Do you think these make sense for anyone to be looking at, or it depends on specific counters and why the promoters or the others are selling stake at this point? And how should one be looking at these bulk deals really, since we are hearing so many of them? And perhaps even this PNB Housing, what would be your view on when something like this gets announced?
Right. So, Stacy, there could be multiple reasons that why promoters are pairing stake and they are opting for bulk deal as a route to dilute their stakes. But I feel that the first and the foremost thing that if somebody wish to participate in any of these actions is to know that whether they are looking for a very short term approach or planning any investment based on the recent price tag that they feel is favorable for entering into the position. So it's completely based on the individual stock, based on the fundamentals. For PNB Housing, as the stock has been holding strong for quite some time now, I feel that this dip could be a buying opportunity, especially those who are sitting on the sidelines, because of late we've seen a very sharp move in the stock, and of late it was hovering in a very narrow range with marginal volumes. So there could be an intraday dip due to this deal around 700. We have the major average, the 200 days of exponential moving average. So around that area, in case if it tests, definitely there could be a possibility that we might see a rebound, intraday rebound also towards 740, 760 area. So it's a buying opportunity, especially if you can maintain a strict stop loss in the market like this. So your stop should be at not below 695 levels. For this position, and use this rebound around 740 to 52 book your profits.
Interesting. So you're saying that the dips could be looked at buying opportunity for PNB Housing. Well, let's also address market open. Then we are opening below that 22,900 levels again. 22,800 is where we are. 0.3% lower for the Nifty, whereas the sensex also below that 75,000 level. So good 200 points cut that we're seeing on the sensex as well. So 75,000, 74,000 levels is where we are with the sensex. The mid cap also there on your screens, close to 0.5% of cuts coming in there for the mid cap, and small cap seeing about 0.2% losses at this point. So all of them in the red rather this morning, but it was expected on expected lines because you did have that handover that seemed quite weak. The bank Nifty also there almost 0.5% down right at opening. So both the broader markets as well as your banking index seeing some sharp cuts, whereas the Nifty and Sensex both trading there rather flat, but close to 0.2% of losses even there for the Sensex as well. Let's also look at who's really putting in, or rather where the pressure is coming in there for the index as well. Let's address the gainers and losers. Then on your screens, the top gainers there, Sun Pharma, interestingly, Bajaj Finance as well as Hindalco after that news, of course, about the Novalis IPO. So we'll be talking about that. But there's also Nestle India, HCL Tech, Adani Enterprise that are among your gainers. Interestingly, Maruti Suzuki now, about 2 sessions ago, it was continuously among your top laggards, but now you're seeing Maruti Suzuki there, even Bajaj Finserv and Dr. Reddy's Laboratory. So both the Bajaj twins there making it to your gainers list, whereas on the flip side, let's look at the laggards then, and you see the likes of a BPCL there, M&M or Mahindra is also making its way to the laggard list. NTPC is among your top losers in trade today. You have Shriram Finance as well as ONGC among those laggards today in trade. But let's address Hindalco, because that was one that was nicely poised up there among your gainers, and this is after there is news flow coming in saying that it is set to raise about $1 billion from that Novalis IPO of it. The company now, or Novalis, is somewhere valued close to $12.5 billion before its New York Stock Exchange listing. Remember, the Aditya Birla Group was in talks about this, the fact that it is now finally going out and going to be listing on Wall Street, and the fact that it has it's looking to raise close to $1 billion from this IPO. That would mean somewhere close to $810 to $945 million is what Hindalco will get from this proceeds. At least that's the likes of what it's looking at from the IPO issue size that they've put out. Now, like I said, it is valued somewhere close to $12.5 billion according to this price that they've put. Also, there is an option for a green shoe, proceeds that could go around to get them more proceeds of close to 1.08 billion, and Novalis IPO is a full offer for sale by Hindalco. So that's where Hindalco's stake will now come down to somewhere around 91.4 to 92.5 around post this IPO. So that's where Novalis is really going to be giving in that money to Hindalco, and which is why this news perhaps propping up the stock as well. Not as much though, because the earnings were also just around the corner, and it did see this positive momentum even through that. We did have CLSA that came out with a note on Hindalco. They have a buy call with a target now at 770 per share. They say Novalis IPO will imply, it gives that 10 to 12 billion dollar worth of market cap for Novalis, which is quite a positive. Also, the fact that the proceeds from Hindalco towards Hindalco might be around that close to $1 billion is something that does keep the street happy. At this point, they've gone on to see that the valuations right now for Novalis is around 8.6 times its FY25 estimated EV to EBITDA ratio. So that is quite interesting to see. Also, the fact that in Hindalco's target price, Novalis is valued somewhere around 6.5 times its FY26 estimated EV to EBITDA. So that is also something that will be in focus. They continue to say that the valuation of the company's stake and also the use of that Novalis IPO proceeds is something that will be quite important to see how, whether it is something that will still hold on to, whether those valuations are right or not. But Ajit, maybe you want to quickly come in here on Hindalco and how are the charts really looking. Of course, there is all of this positive news that is coming. But besides that, we've been seeing the metal pack rally and how in the past few sessions at least. So what are the likes? Is there chances of one looking at Hindalco at least, or having some kind of position? What are the stop loss or target that you would suggest for the likes of a Hindalco?
Yeah, so Stacy, in fact, the metal pack is witnessing a bit of a profit taking. Today we have numbers from Tata Steel also, and Hindalco is comparatively looking better because the stock is still holding around record highs, this recent highs, and today also, despite the negativity which we are seeing, the stock is managing to hold its gain. But I feel that one should not maintain deeper stop losses because if the trend has to maintain, it should hold this 678 level, which is 6.7 points down from the current level. So that should be a strict stop. And the highs close from 700, 705. That should be our immediate target area in the India.
Right. Well, let's try and get some queries answered now then by Ajit. Let's address a couple of them that are coming in. One coming in from Arun Srinivas. He wants to know whether he can accumulate something the likes of an HCL Tech or Infosys at the current market price and from a long-term investment perspective, or can he see these as a good correction? Is there likely to be a good correction in the near term for him that could be a better opportunity? So what should we suggest for to Arun when it comes to HCL Tech as well as Infosys?
So, Stacy, in fact, we are very closely eyeing two key sectors which have not participated yet. So, one is IT, other is FMCG. And in the IT pack, HCL Tech was among the top performer because despite the overall negativity in the IT pack, the stock could manage to make a new record high. In the month of February this year, around 1620 zone. So this retracement towards the previous record highs is a buying opportunity definitely if you are planning, let's say, for mid to long term. So at least for a year to two, if your time horizon is that, definitely you can utilize this opportunity to accumulate HCL Tech at current levels, and you may add more if it corrects towards 1200 zone. Similarly, for the Infosys also, we are seeing a similar kind of attempt of recovery, but it's comparatively weaker. So I would suggest that as of now, one should stick with only with the top names. So HCL Tech is the reference. In case if you are planning to go ahead with both, then for Infosys, keep the quantity limited for a time being now, and let it cross its record high around 1740 to add more.
Interesting. So you're saying HCL Tech would still be better price and better value compared to an Infosys at this current juncture. Well, let's also address a couple of other stocks. We did have IRCTC come out with its Q4 numbers. The net profits were up just by about 1.9% at 284.2 crore rupees on a YOY basis. Revenues were up by a good close to 20% at 1,154.8 crore rupees. We saw EBITDA rising by about 11.6%. Whereas margins too have kind of squeezed or declined to 31.4 versus a 33.6 on a YOY basis. The board has gone on to recommend a final dividend of 4 rupees per share. But let's talk about the IRCTC or the railway pack with Ajit as well, because that is something that has been in focus. In fact, in the run-up, a whole host of PSU stocks, I would say, but also particularly a lot of railway stocks that have been making, newer highs every other day. We saw the likes of an RVNL also touch 52-week high, just last week. There were the likes of an IRCON after its numbers that saw some splendid gains. So, railway stocks, is there something that we need to be watching out for? Rather, is it, now the valuations kind of getting stretched because you're seeing that much interest? How would you be looking at something like that, and also IRCTC post its earnings?
So railway stocks, they have done exceptionally well, Stacy. We all know that, and they're still holding strong. But I feel that comparatively, IRCTC offers better comfort, considering that it didn't participate in the similar manner to what we have already seen in the other counters. But since we are seeing a downtick today, the stock is down nearly 4%. On the closing basis, it should hold this 1060, 1050 zone to maintain the positive trend or the bias that we were seeing it earlier. So if you are planning any fresh trades, you can go ahead with that. But on the closing basis, it should maintain these levels to reclaim the previous swing highs and inch higher. So as of now, for the other counters, I feel that you may booking some profit in the higher levels, because the market breadth are also indicating a similar kind of price action, wherein mid cap and small cap index manages to hold flat to green, but the market breadth overall indicates that the participation is selected to the handful of the names.
Interesting. So maybe IRCTC seeing that pressure now, but there is that momentum there for railway stocks. Well, let's do stay on with us, Ajit. We'll get a couple more queries answered through this course, and I would ask all our viewers also to keep writing in on our feed, and we'll try and get them answered. But let's also look at the broader perspective, because CLSA has come out with its India strategy note, especially now in the run-up to the final phase of the elections and D-Day on June 4th. But it says that about 54 companies and mostly PSUs in their likes will be direct beneficiaries, they say, of the current government's policies, and have if it is this government that continues into its third term. Now they say PSU rally may continue if the current government is back into power, and especially if they come with a healthy majority. Now the stocks that they are picking are in the likes of an L&T, NTPC, NHPC, PFC, also an ONGC, MGL, IGL. They are preferred stocks. So they have a whole basket there coming in from oil and gas space, from also the power space, as well as the likes of an L&T is what they pointed out. They also have listed out Bharti Airtel and Indus Towers as well as Reliance as their preferred stocks. Now among the non-PSU stocks, they have picked out Ashok Leyland and something like the likes of an Ultratech as well as L&T, like I was mentioning. Now they also see a narrow election theme-based rally by the end of May, or even into June and July. So perhaps that rally that we are anticipating, and also most of our politicians really have been talking about that, come 4th of June, you're going to see at least the Indian equity markets really have a party. Is that something that everyone feels? Maybe not. Maybe that election theme-based rally might just be confined to the first weeks of June. Well, they also see in terms of sectors, they're saying that banks as their best risk reward ratio for the India growth plan in all of the second half of FY24, and the likes of an HDFC Bank, ICICI, IndusInd are among their picks. So they're given a whole host of stocks that you can be looking at post this. But what is more important is the fact that maybe this rally or this theme-based rally of post-elections might not really hold on to of something that is already priced in. So let's get discussing that and whether that is the sentiment that most people are sharing. Joining me now for that is Siddhartha Khemka. He's the head of retail research and broking at Motilal Oswal Financial Services. Good morning, Siddhartha. Good to have you with us here at Moneycontrol. Like I just pointed out, CLSA has put out this note, but also the word on the street, or at least what you are picking up. Do you feel that most of these things are already, the importance of this election verdict might not really be something that sways our market so much, or should we go with what the politicians have to say, and that it's going to be a party post June 4th? How are you looking at it?
Yeah, good morning, Stacy. Glad to be on the show. So if you look at, I think the market is definitely waiting for the verdict from the elections. And as you highlighted with the CLSA note as well, I think the direct beneficiary of the current ruling NDA government coming back would be largely the PSUs, the public sector enterprises across industries, and mainly because they are a lot of them are part of the core industrial segment, and that is where we see with the consistent economic growth, the industrial segment could continue to do well. Also, the government's focus on manufacturing has helped a lot of these sectors, be it railways, be it defense, be it capital goods, infrastructure, roads, real estate, cement, and to top it all, the public sector banks, which are kind of the backbone to financing all these spaces. Having said that, I think yes, to a large extent, market has definitely discounted the event of the NDA coming somewhere about 340, 350 seats with the BJP at around 310, 320. And with that, there could be a little bit of profit booking post the outcome. But again, we see that once the government is formed, the focus will return to the fundamentals, which is your economic growth, the government policies, and then the final budget that would be presented after the government formation. So I think overall, bearing the near-term volatility, the overall outlook continues to remain very positive.
Right. So there are externalities that we'll have to also look at, and I'm talking about, of course, if you're going to go back to the fundamentals post, the election results, some of those factors are what is happening with crude. Now, we've seen quite a bit of, this whole geopolitical tension taking newer ways that it is really showing out at, and right now we are seeing crude also again go up by, another like almost 3% overnight yesterday, that we saw somewhere around $84 per barrel is where we are trading. But we're also seeing companies to the likes of a Reliance, there is also news flow coming in where it has gone on to sign a deal, a one-year deal with Russia's Rosneft, and this deal they could be buying somewhere close to 3 million barrels of oil, that will in rubles. So do you think all of these kind of news flows that are also coming in could really change what happens to companies like an RIL or the other OMCs here in India?
Yeah, Stacy, I think crude is the joker in the pack. Very difficult to predict given the current geopolitical environment. One thing is very clear: in the last 2 years, we have seen 2 wars erupting, especially in the Middle East. However, crude has kind of remained stable, or you can say in a broad range between that 75 to 80 to $90 per barrel, which is kind of comfortable for the Indian economy. Anything beyond that would start hurting our economy. But as you said rightly, yes, there are deals which are available for Indian players. India has managed to procure crude from Russia at a discounted rate to the international markets, and that has helped India in terms of the dollar outgo, B in terms of keeping the fiscal deficit in check, and C finally the inflation numbers also being under control. So if the crude remains between that $80 to $90 barrel, I think it is good and positive for the Indian companies, the Indian economy, and as well as the Indian oil marketing companies.
Siddhartha, do stay on with us because we like to address a couple of queries that come in from our viewers, and so I'm going to ask you to just hold on, and we'll be talking about the broader perspective in a bit. But let me quickly go back to Ajit and get a couple of queries done then from him right now. Ajit, Ashwin wants to know whether it is a good time or good level to be entering something on the likes of a Geo Finance. So what would we suggest to him at this point if one is to look at Geo Finance? Is there an entry level right now, or what would be that level that he should track?
So Stacy, we have seen phenomenal move post listing in Gift Finance, but now we started seeing a bit of lack of momentum or bit of early distribution sign. So for a time being now, I would recommend to wait and let the stock stabilize about 360. If it reclaims that mark, then definitely one can look at re-entry. Otherwise, on the downside, you might get the level close to around 330, 335. So wait for either side break or sustainability above, let's say 360 or a dip towards 330 to enter fresh in Geo Finance.
I hope that answers Ashwin's question. Another one coming in from Anirban. He wants to have a view on MTAR tech stocks. He has got some of them already, and he bought them at 1,864. Today it has fallen, he says, due to the quarterly results, and whether he should hold on to it or buy some more on the dips. What would you recommend for MTAR?
So MTAR is underperforming in the current market scenario. The stock has retraced from roughly around its previous high of 2,900 to 1,700 mark. But the downside also seems capped because of late in the recent months we have seen the stock forming a very strong base around 1,700 mark, and it's holding in today's session as well. So after the gap down opening, we are seeing the stock is managing to recoup most of its losses. So yes, you can add more, but now for the entire position, your stock should be at 1,740. So if you are okay with that, you can add to this position. upside around 2160 is going to be the first resistance, and then 2340.
Right. Siddhartha, I come to you now and get your view on the whole metal pack. In fact, I was chatting with Ajit also earlier on how these particular stocks are reacting. Of course, there's news flow like today. There is the whole like Hindalco holding out compared to Tata Steel, which will come up with its numbers as well. So a lot of headline-worthy reactions. But if you have to look at from a broader perspective, we've seen the metal pack quite have a good rally in this past couple of weeks. In fact, that being one of the better top gainers sectorally as well, the Nifty Metal Index doing quite well. How should one be looking at it, or is there a reason to be looking at this particular sector, and is that something that even you guys are doing?
Yeah, so Stacy, overall metal sector after last couple of quarters of going under the pressure because of realizations coming down and demand being soft, last 2 quarters, which we are basically the Jan-Feb March quarter, we have seen improvement not only in demand but even realizations have picked up, and this is largely to do with what is happening in China. So China, despite the pressures in terms of the overall economic growth, there have been stimulus which the government has put in, and that is helping revive demand for some of the commodities. And on back of that, we are seeing that the base metal prices have gone up. On the other side, the precious metals we have seen because of the geopolitical issues, because of the central banks across the world buying gold, we have seen prices for gold, silver, copper, zinc being on multi-year highs, and that is also helping some of the commodity stocks in the Indian industry. So I would say that the upcoming results would be positive in terms of improving realizations on back of strong demand, improving demand especially from China. So you look at some of the companies in the base metals, for example, on the ferrous side, we like the JSW Steel, Tata Steel and SAIL. On the aluminium side, Hindalco is something that we like. Novalis is doing well. They came out with very strong numbers, Q4 numbers, and the idea the company is in Novalis planning to increase its value-added products. So they're doing a lot of capex there, which would tide over the commodity cycle. So Hindalco is something that we like, and to play the precious commodities, the zinc and silver prices going up, you have a Vedanta where a lot of corporate development is happening. So definitely one needs to be very watchful of the news flows regarding the demergers that the company is going to announce, the stake sale that or the fresh funds that the company is going to raise. But within the overall pack, I would say that one can focus on Hindalco on the aluminium side and SAIL and JSW Steel on the ferrous side.
Right, interesting picks there that, Siddhartha is also pointing out. In fact, we have a couple of queries that are coming in about Vedanta and the demerger and how that will really pan out. So you'll have to look at the news flows. For now, the counter, though, is seeming quite in the green, at least for today. So everyone's going to perhaps play that wait and watch game when it comes to Vedanta. But Siddhartha, quickly back to you. I want to get your view on how we are looking at that bumper dividend that came from the RBI towards the government. You also have LIC and how they have given a really good share. Is that going to change the prospects of where India's growth story is? In fact, we just had IMF come and change its outlook for the GDP forecast for China, and they've increased it, saying that China will grow somewhere around 5%. Could those be actually reasons to worry even for India? Because not too long ago, many people have been saying that the fund flows that need to be coming into India would perhaps be overweight now at this point because we're seeing stretched valuations. Would you also agree with that view, or do you think India has enough and more reason for FIIs to come flocking in?
So, Stacy, I think it's a positive development. The very high dividend that RBI has announced only goes on to show that the strength that the central bank has had in terms of managing the economy as well as the finances. So it will also help the government in terms of funding its requirements, because if you see these investments have not been that strong in the last couple of years which the government had planned. So definitely a big positive. Fiscal deficit would be under control, and that again goes on to show the strength of the Indian economy. As we discussed earlier for the metals pack, I think Chinese economic growth improving is a big plus for the global economy. China has been the growth engine for a very long time, which was missing for last couple of for the years. And now with China coming back, I think it will only support the economic growth globally. Yes, in terms of FI flows, India in terms of valuation is a little bit higher or a premium because of the high growth that we are able to deliver. There has been some profit booking that has happened, but I think post elections, with the focus will come back. Within the emerging pack, I think India is now the second largest weightage after China, and it has overtaken some of the other players, countries in the emerging market space, be it they are Taiwan, be it Vietnam. So I think that is very positive. So about at 18-19%, India's weightage in the emerging market index is pretty high. It will still take a lot of time for India to reach the 30-36% weightage for China because of the size. But I think FIs have a lot of reasons to come back. The economic growth for India itself is upwards of 6.5%. We have seen the first month of this financial year GST collection being at record high, which only indicates that economic activity continues to be pretty strong for India.
Right. Ajit, I'll finally have you give us your last word and also address one query before we go. One wants to know your view on door welding at this point. I'm seeing that the stock is down by about close to 1.5% at this point. But what is really the trigger here, and how should one be looking at this particular stocks? And also if you have any other stocks that you have on your radar and would like to recommend our viewers.
So certainly, door welding is a normal profit taking that we've been seeing after nominal surge from 600 to 1700 mark. So if you have any position, you should definitely liquidate, because we have already breached the key support area around 1300 mark, and the volume have also increased substantially. So again, maybe closer to around 1120 that you might look to re-enter. Now coming to the stock specific moves that we are seeing today, despite the negativity, the good part is that certain pockets like Bata India, which is holding strong, that one can look at. Then we have SBI from the PSU pack, which is maintaining around the record high. So these are some of the names which one can look at. But be restricted to your positioning, considering that the overall tone of that we are seeing is slightly on the negative side. But yes, selective participation is something that we might continue.
Right, so selective participation, and he's liking stocks like Bharti Airtel as well as SBI. Well, thanks so much, Ajit Mishra there from Religare, for giving us your perspective, helping our viewers with their queries. But quickly, one last question that I'm going to pull in from Siddhartha as well. Siddhartha, what according to you is that next innings for the market, and which sectors are going to be the ones, taking it up? If you're talking about a post elections and a post outcome kind of scenario for FY25 rather, on a really broader perspective, what would be those sectors that you are looking at?
Yeah, so I think if the election goes as per the market expectations, some of the key themes that could play out is the credit theme. So you will see some of the banks, NBFCs doing well, also with the interest rate cut cycle to start towards the end of the year. That will also be supportive of the entire credit theme. The second is the capex theme, which is the pet theme for the NDA government. You will see a lot of announcements with regards to newer infrastructure developments. Capex would continue to do also infrastructure, roads, capital goods, railway, defense. So that is another theme, I think, which will do well. And finally, the third C in my theme for this year is the capital market theme. Irrespective of the government outcome, I think the financialization of savings continues to do well. We are seeing record demat accounts being opened, record SIPs inflows into mutual funds. So this entire capital market ecosystem, right from your exchanges to your AMCs, to brokers, to your registrar, transfer agents, demat accounts, I think that entire pack is the third theme that one should look out for in the current financial year.
Well, quite interesting. Those are a good mix also, that one could actually pick and choose stocks from those particular sectors. But thank you both gentlemen for giving us your time. Siddhartha Khemka from Motilal Oswal as well, helping us with that perspective, and hopefully we will touch base sooner, perhaps when we have more to do, either the exit polls or post the results, where we can talk about a different kind of scenario that markets would really take. But for now, both the indices are trading rather flat. We would say in that negative zone currently. Nifty at 22,800 odd levels. The sensex also below that 75,000 levels at 74,900 odd. So that's where we are closing this day. But hopefully through the trading session, we might see some bit of action and momentum. But all of those stocks that you could keep in focus. But for now, it's a wrap and goodbye from the entire team that puts this piece together. Thanks so much for watching. Do keep post us your feedback in the comment section, and also write in to us with your queries, and we'll try to get them answered on our live feed. You need to be sending us the queries that you'd like our experts to give their views on. But for now, it's a goodbye. Thanks so much for tuning in.